Listen up, party people. I want to talk to you today if you're thinking about wiring money directly into one of my deals or somebody else's deal. I'm not going to give you any nonsense today. If you're thinking about investing with me or anybody and you're about to send a wire, I want to make sure that we are aligned before the money leaves your account. Once it's sent, it's real. It's not a spreadsheet anymore. It's not a pitch deck. It's not a projected IRR. It's capital now invested, now inside an operating business. Because remember, a multifamily deal is an operating business. So this is not a savings account. When you invest in a syndication, it is not a savings account. It is not a money market fund. It is a business. And a business may have seasons. There might be years where everything feels really good, smooth, happy sailing, predictable, easy peasy, lemon squeezy. And then there are years where expenses just move faster than the rents and insurance gets crazy and maybe taxes go up. Maybe you have things break on site and leases break and tenant chaos and collections get super tight. So that doesn't mean that the deal is broken. That's something you need to know right off the bat too. It means that you're inside real market conditions instead of an actual pro forma. So when we as operators create a pro forma, that's all that it is. It's a prediction. And we can only predict so well and so much. So nobody out there should be claiming that they know exactly what's going to happen in the future because nobody can predict the future. So when you're going to invest with somebody, when you're thinking about wiring money into a deal, you really have to know what you're doing. And it's not for everybody. I don't want to paint the picture like if you invest $50,000 today, you're going to get your $100,000 next year or even 5 years from now, because it might not happen. There is risk involved with anything that is worth doing. And if you don't understand that, then you might not be an investor. Throughout the past 6 years of me being a multifamily investor, owner, operator, I have found a number of different investment types of people. Some people are professional LPs, and they go in there, they know which operators they want to work with. They can spot a good deal and a bad deal right away. They can pick out parts of underwriting that are just not accurate or likely to fail. And they know which deals that they're going to invest in, and they do this for a living. There are people like that, professional limited partners. Then there are people who want to get involved in multifamily and they don't know much about how to look at deals, what is real value, and what a pro forma looks like or should look like. And then also don't even understand the dynamics of market conditions, and things are up and down in different seasons, as I said before. So those are the people that get into trouble. You don't have to be a professional limited partner or investor to find a good deal, though. It's important to just do your homework, do your due diligence, ask the right questions to the owner operator, me, right? Ask them the right questions and make sure you are comfortable getting into something. Because when you invest with me, you're not betting on just the building. You're betting on how I operate when things get tight. You're betting on whether I protect reserves or stretch them to make distributions look good. You're betting on whether I communicate clearly when the numbers aren't pretty. You're betting on my discipline. You're betting on whether or not I can get us out of troubled waters. You're betting on whether or not I'm going to make good decisions and good judgment of when to refinance, when to sell, if we should refinance, if we should sell, if we should make a distribution, if we should hold back, etc. As an owner operator, as a general partner, I have a fiduciary responsibility to my investors, but you still can't just put 100% of your trust in the operator. You have to know the deal too. You should be coming to me, though, and you should be asking me uncomfortable questions before you send that wire. Ask me what break even occupancy might be. Ask me how much cash is in reserves. And ask me what happens if rent growth is not a thing, if it stalls for 2 years. Ask me how long we could operate without distributions if we had to. And if a sponsor can't walk through those scenarios calmly, it might be a red flag. I am not offended by those questions, and I actually expect them. I'm building long-term ownership. I'm building long-term relationships. I'm building long-term generational wealth. I do not chase quick acquisition fees or any fees. I will take fees when it is merited, when it is warranted, but I will not take them if not warranted. If a deal performs well, guess what? We win together. And if a deal struggles, I'm the one who's going to feel it first in my time, in my energy, in my stress, and in my reputation, which is so important to me. And that's alignment. So before you send money, I want you steady, not overly excited, not overly nervous, just clear on what it is you're doing, that you're investing in something that is a slow rolling train that has historically done well for investors. Calm investors are the best partners, and steady partners will build real wealth together as a partnership over time. So don't just get out there and wire money because you want to be a multifamily investor. You want to make sure you understand the difficulties that could happen, the risks involved, along with the potential upside, and then weigh it. Talk to yourself about it. Talk to your spouse, talk to your partner, talk to whoever you need to talk to about whether or not it is the right investment idea for you. Yes, you should be asking the sponsor questions. Yes, you can ask me whatever questions you want, and you really should. Now, back to your investment. Once you wire your 50 or your 100K, you have to consider it illiquid. So when we are doing a syndication, the syndication is typically going to be illiquid. You can't pull that money out. Yes, there are ways that you can get your money out of it, but it's very, very tricky. So when you're reading your syndication docs and you go over the PPM and the operating agreement with your attorney or whoever you're going to review it with, make sure you understand that your money is essentially illiquid and that if you wanted your money out, there's a very difficult process for doing so and would likely require you to find somebody to buy your shares to buy you out, something of that nature. So when you invest, you have to think of it as a long-term investment. Whether or not you get the money back in 2 years because the market completely shifted to now it's a seller's market and we sold and we made a huge profit is different. You have to consider it illiquid for the entire term, typically 5 years. And if you are not comfortable making that investment, then you should not. You should not feel uncomfortable about this at all. So again, back to the point of there are professional limited partners who do this for a living and just look for deals all the time. And they understand very well that there is risk involved. There are market cycles. There are different seasons. There are ups and downs, ebbs and flows. So they pick the operators that they like to work with and that they trust. And they also know that their funds are going to be illiquid. So when they send that 50 or 100K, they're resting easily. And you should rest easily too. But in order to do so, you have to make sure that you are aligned with the operator that you're working with, whether it be me or someone else. And you have to ask the right challenging questions. Don't be afraid. And if you're afraid to get on the phone and ask those questions, then send it as an email. Sometimes that helps people. Send those questions. Again, some of the uncomfortable questions you might want to ask is what is break-even occupancy? How much cash reserves are there? What are your fees and are you taking them and why? Why do you justify these fees? What happens if rent stalls, if there's no rent growth? What happens if we're 90% occupied and we can't get to 100%? What is insurance looking like? How are you going to find the best insurance rates? How are you going to grieve taxes? These are the types of questions that you want to ask the general partnership team. And if they can't answer those questions, you might want to reconsider working with them. And you really have to understand how to underwrite a deal. So once a general partner presents a deal to you, it is now your obligation to take that deal without even looking at their pro forma and create your own pro forma. So limited partners have the advantage of investing with no responsibility other than making sure the deal works for them. The majority of the work that you're going to do as a limited partner is making sure the deal checks your boxes. You have to do your underwriting and be comfortable with your underwriting and your pro forma before you wire the money. And once you feel good about it, send the money and just relax. And understand that there are ebbs and flows and market cycles and all crazy things that could happen and crazy good things that could happen. Trust the operator. Make sure that they are somebody that you want to be working with for the next 5 years or so. Do your due diligence to underwrite the property properly and make sure you're comfortable with the assumptions. Get out there, find an awesome deal to invest in, and 3 to 5 years from now, enjoy and reap the returns of this great asset class of multifamily.